Hello, everyone. Today is Monday, January the 19th, 2026, Martin Luther King Jr. today, and you've joined Ask a Care Navigator, Mondays with Maureen. Hello, everyone. My name is Maureen Williams, and I'm the Director of Care Navigation here at Four Seasons, the Care You Trust. And we try to create this space on most Mondays to talk about issues associated with living well and aging well, and perhaps how Four Seasons may be of service. If you have any questions or comments, please call us at 866-466-9734, or please go to our webpage. Lots of information there. And it is fourseasonscare.org. Spell out the number 4, Four, SEASONSCARE.org. Or you can drop some comments into the comments box from whichever platform you're viewing. We're just grateful you're here. And I'm also very grateful to the Van Winkle Law Firm for serving as the title sponsor for this program, Ask a Care Navigator, Mondays with Maureen. The Van Winkle Law Firm is one of the most respected and established law firms in North Carolina, providing exceptional legal representation for personal, individuals, families, and businesses in both personal, commercial, business, and estate planning matters, all sorts of legal advice. Should you want to get more information or to book a consultation, go to the website, which is www.vwlawfirm.com, and someone there will be happy to assist you. Thank you to our community colleagues at the Van Winkle Law Firm. Well, the last couple of weeks, I've kind of been talking about where you live, be it a continuing care retirement community or in your home or other locations. So today I thought I'd kind of dip a little bit into the costs of assisted living and memory care and kind of unpack that just a little bit. This is not comprehensive. This is just skimming the surface because a lot of people should plan. We should all plan for where we're going to live and if we need additional help. And if you're going to be moving into assisted living or memory care, which is kind of a subspecialty of assisted living, there will be costs associated with that. And you need to make plans now. Do you have the financial wherewithal, the financial fortitude to live in assisted living or memory care? Assisted living communities generally will help people with activities of daily living, like bathing or dressing, and also a big part of that is medication management. That's frequently why people move into assisted living. It's not a nursing home, but it's just assisted living. And it really allows people to maintain some modicum of independence while living with assistance. Memory care, I mentioned, is a special subset of assisted living, and it caters to people who are living with Alzheimer's or other types of dementias and has secure layouts, secure buildings. There will be cognitive therapies, and there'll be 24/7 help and supervision to perhaps supervise some of their more unique behavioral needs. Interestingly, in 2025, get this, y'all, the average annual cost for assisted living was around $64,000 a year. $64,000 a year. Believe me, I see them that go much higher, and I see them that go lower. And memory care, you can just plan on adding 20 to 30% more. So that might be well over $100,000 for memory care per year. I've seen that too. So because of the enhanced staffing and programming that memory care communities usually have. This can really drain the savings account if you haven't planned otherwise. So I wanted to share with you some of the varieties of payment strategies to pay for assisted living and memory care. And for some people, this is well worth the price, well worth the price. And for some, there's a combination of payment sources that pay for assisted living in memory care. So let's unpack some of them. And first of all, I need to just tell you that Medicare pays none of this. Medicare does not pay any assisted living or memory care costs whatsoever. So hear that clearly. Medicaid pays for some assisted living or memory care, parts of it, in special circumstances, but you have to have an exceptionally low income and low assets. So I'm just going to give that blanket declaration. It varies state to state. I know what it is here in North Carolina, but the monthly income must be extremely low for someone to be eligible to live in assisted living or memory care and have special assistance Medicaid pay for it. Check your state's Medicaid program. Now, there are about 4 or 5 core ways to pay for assisted living and memory care. And the first one, of course, is private pay. You have the income, you have the assets, you have the savings to pay for it. Boom. I've seen that happen many times. There are no eligibility hurdles with insurances and so forth. You're just in. The downside to that is that it drains the accounts very quickly, very quickly. The assets go very quickly. All right. Another way, kind of a core way of paying for living in assisted living or memory care, is selling one's home. Um, just liquidate your residence, and after what's left after downsizing and relocating, that's what you live off of to pay for your assisted living or your memory care. And these are substantial funds sometimes, um, and it's good if you, especially if you have equity in it, a lot of equity. That's a good thing. The downside is that lots of families are emotionally attached to their homes, and there might be, and of course, there are transaction costs to pay someone to sell your home. If you do wind up applying for Medicaid, there might be a look back, a 5-year look back if you qualify after selling your home and spending down your assets. So it's just some challenges. Another basic core way to pay for assisted living or memory care is something called a reverse mortgage. You hear a lot of advertisements about those on television. Basically, you're borrowing against your home equity without monthly payments. There are lots of caveats with these in terms of what you can access and what you can't access, what funds are tax-free and what aren't. Actually, those may allow many people use a reverse mortgage to be able to stay in their homes longer. It'll certainly reduce any inheritance for your beneficiaries if that's important to you, and there may be some high fees and interest associated with that. But that might be a way for you to fund your assisted living and your memory care. Another basic core way is called life insurance or annuities. And those really vary across the board too. Basically, they cash out their policies or use some sort of hybrid product to provide funds for your assisted living care or your memory care. You usually get a lump sum amount, and there are predictable payments, payouts that come with that. You might be forfeiting your death benefits, though, for your life insurance policy, and there will be tax implications for the annuities. Consult your financial advisors for that. And then there's a fifth kind of basic core way that people fund their assisted living or their memory care, and that is through family contributions. Basically, relatives might pool their assets to help fund your care in assisted living or memory care. It can be very customizable. This could strain relationships, though, to be very honest, and there may be tax reporting required for those of you who are contributing to covering your loved ones' living expenses there. So it's particularly for very large gifts. So those are just 5 basic core ways. Those are kind of what are called foundational ways to pay for assisted living or memory care. And remember, memory care costs are about 20 to 30% higher than assisted living costs. Alrighty? Now, there's some other programs and subsidies out there I want to talk to you about briefly. And the one I've already mentioned are Medicaid waivers. And this is for eligible residents of each state. 47 states have Medicaid waivers for assisted living and memory care. North Carolina is one of those. It's called special assistance. These are for low-income seniors. And there's special waivers for that. And we would encourage any of you wanting to pursue Medicaid as a waiver to pay for you or your loved ones' assisted living or memory care expenses to consult an elder attorney. Look at this very carefully. It may be worth the upfront cost, or certainly talking to the Medicaid offices in the jurisdiction where you live. It is possible, but the income restrictions are very severe. Just be aware of that. Another option, another key subsidy might be veterans benefits. If your loved one is a veteran or your veteran spouse is your mom, your dad, let's say your dad was a veteran and your mom is, the spouse of a veteran, they may be eligible for one of the VA's most common programs, which is called the Aid and Attendance Program. It's basically a pension add-on for those needing additional assistance with activities of daily living. It is somewhat income driven. It's perfect, actually, for assisted living and memory care. It actually delivers extra income for the veteran and a little bit more for if they're applying as a couple. Let's say it's your parents. There's a cost of living adjustment each year. There's a 36-month look back, but they're not so much on those asset restrictions as Medicaid has. Okay, the VA doesn't pay the facilities directly, but it pays the beneficiary via pension checks. So whoever's managing your loved ones or your money will have to be watching for those monies to those pension checks from the VA to deposit into your account, so then you can pay for your assisted living or memory care. A good place to start with this is to apply through va.gov, or actually you can use your veteran service officer in the county where you reside, and they're generally very helpful. So that's an option. In many assisted living or memory care communities, one of the first questions they'll ask is the person that needs to move here a veteran? Because they know how to tap into these aid and attendance programs. Another option is long-term care insurance. We were just meeting with some new clients, one of whom has a long-term care insurance policy, and looking that up, trying to see what it covers. Because interestingly, some of those policies will cover assisted living, but not home care, or some will cover home care and nursing home care, but not assisted living. Know what your policy is. But it's just if you own a long-term care insurance policy, whether you've purchased it outright yet or you're still making payments on it, this would be a reason. If you're moving to assisted living, this is frequently a reason why that long-term care policy claim should be activated. All right. And of course, look at the terms of the policy. Some of them have time limits, some of them don't have time limits. Some of them have different elimination periods, etc. Know what your policies are, what they say. And you need to also look at those long-term care insurance policies if you don't have one already. Sometimes it is too late, because if you have certain pre-existing conditions, may not be eligible to get a long-term care insurance policy. That's why so many people in their 50s and 60s are purchasing these policies now. All right. Another tool, another type of subsidy would be a bridge loan, which is basically if people are waiting for a home to sell or benefits to be approved, they take out a loan to bridge from when the funds come in from the sale of the home or the policy approval. They take out a bridge loan to cover that amount. These are usually 6 to 18-month loans with various fees associated with them. They might be used to fund move-in fees or the first month's rent, or even up to 6 months of rent or memory care in assisted living or memory care. And the funds will probably go directly to the providers. This approval takes days, very quick compared to waiting on another commercial loan. However, the fees are usually higher. Okay. Another option is to look at the tax benefits. There are certain tax benefits that you might get for qualified long-term care costs for if you're paying them. So you want to talk to your tax advisor or your CPA. There is a medical expense deduction. So this may be part of what you are eligible for or your loved one. Okay. And it really hinges on the eligible person having being a chronically ill individual. That's the phrase. So, or due to someone needing assistance with at least 2 activities of daily living or having cognitive impairment like dementia. So, any way, consult with your tax advisor. I know many people who take deductions for this. Then there may be a medical expense deduction for you all to consider with your loved ones' assisted living and memory care costs, particularly if they exceed 7.5% of a person's adjusted gross income. Consult with your tax advisor, okay? If you or your loved one is paying for assisted living and memory care, and those costs are greater than 7.5% of your loved one's adjusted gross income, they may be eligible for some tax benefits. You need to know that just provides for direct care, not the room and board, but for like direct care. So there's a portion of that. Talk to your tax advisor, okay? And you need to know that long-term care insurance premiums range all over the place. Some people, generally the funds coming out of those are tax-free, but you need to make sure that the premiums are paid up and that you didn't have a lapse, or you talk to your people helping you file the claim, which is something that Care Navigation is happy to do. But you want to make sure that that's a tight claim before you submit it. Sometimes you can tap into health savings accounts or flexible spending accounts to pay for some of the costs of memory care and assisted living. Okay. So there are lots of options out there, but you just need to start having a financial conversation with yourself or with your loved ones or with your financial advisors or your bankers. Should you need assisted living or memory care, can you afford to do it? And if you can't, what are your other options? Okay. This isn't one size fits all. You just need to start planning. And this is, by the way, costs are rising 4 to 5% annually, but sometimes the adjustments in cost of living are less than that. So you really need to be thinking about where are you going to live well into retirement, and should you need additional help from assisted living or memory care, do you have the financial fortitude to do that? And now's the time, no matter what your age, to start thinking about this. Okay? So take a deep breath. This is a lot of information, but I just want to give you a teaser. Start thinking about this now. I know that I have, my husband and I have. We've made plans, and we need additional care, it is pricey, but this is what we've saved for. So there you go. Whew, take a deep breath. That was a lot of information. So we're going to continue this conversation about where we're going to live next week, mostly associated with the cost, perhaps about nursing homes or even just staying home. But we'll continue this conversation next week. So if you have any questions, give us a call at 866-466-9734 or go to our website, which is fourseasonscare.org. Spell out the number 4. And just let us know what questions you may have. We'd be happy to talk with you. So join me next Monday, January the 26th, 2026, for more of Ask a Care Navigator, Mondays with Maureen. Thank you so much and have a great day. Bye-bye.